What are realistic operating expenses for diverse farm operations? Have you ever wondered what it really costs to run a farm? Operating expenses can vary quite a bit based on the type of farm, its size, and what crops or livestock are involved. Let's break it down. First off, operating expenses typically include costs for seed, fertilizer, chemicals, fuel, labor, repairs, irrigation, custom services, and interest on operating capital. For crop farms, the major expenses often include seed, fertilizer, pesticides, fuel, and labor. If you are looking at livestock operations, you will also need to consider feed and animal purchases. In the United States, total farm production expenses are projected to be around $450 billion by the year 2025. This figure gives you a sense of the scale of expenses involved. For livestock farms, feed is usually the largest single expense, followed closely by labor and livestock or poultry purchases. Interestingly, while feed costs have been trending downward recently, labor costs are expected to rise significantly due to increasing wages, especially in areas where mechanization is not practical. To get a clearer picture of financial health, many farmers look at operating expense ratios. This ratio measures operating expenses as a percentage of gross from income. For example, grain farms with ratios above 80% are seen as vulnerable, while those between 60% and 80% are in a cautionary range. Recent data indicates that many medium and large grain farms have ratios exceeding 80%, reflecting the pressures of rising input costs. When it comes to specific crops, operating costs per acre can be broken down into inputs like seed, fertilizer, chemicals, fuel, and custom services. For instance, in southern regions of the United States, operating costs for crops like corn, cotton, peanuts, and soybeans will include these inputs along with crop-specific costs, such as ginning for cotton or drying for peanuts. These costs can change year to year based on input prices and usage levels. Looking ahead to 2024 and 25, total farm production expenditures are expected to decline slightly due to reductions in input prices like fertilizer, pesticides, and fuel. However, labor costs are forecast to rise significantly, with wage rates increasing by about 9% in certain regions. This rise will impact crops that requiring more manual labor. From the perspective of farmland investment, understanding these operating expense trends is essential for accurate income capitalization and valuation. Investors should keep in mind that while some input costs may decline or stabilize, labor costs and other variable expenses may increase, affecting net farm income and, consequently, farm real estate values. Monitoring regional and crop-specific expense forecasts can help investors assess the sustainability and profitability of diverse farm operations. Realistic operating expenses for diverse farm operations typically range from moderate to high levels, depending on the type and scale of the farm. Major costs include feed, labor, seed, fertilizer, chemicals, fuel, and custom services. Recent trends show some easing in input prices but rising labor costs, leading to relatively stable total expenses for many farms in 2025. These factors are important for anyone looking to understand farm income and property valuation.